the MoneyMagpie Invest podcast. I'm Jasmine Birtles, the founder of MoneyMagpie.com, and I'm here today with Ziad Mabsout, who is the co-founder and CEO of Vennre. Hello, Ziad. Great to see you.
Great to see you, Jasmine.
So let's just really dive in to this because I'm really interested in what Vennre is and why it is. Because you seem to be aiming particularly at what they call Henry's, high earner, not rich yet, one of those marvelous acronyms that they come up with. And you're enabling, particularly, I would say, young high earners to get into private equity and some other markets, aren't you? Explain what you do and why.
Yeah, absolutely. Actually, for the people who are ultra high net worth individuals, their money works harder than they do. But for Henry's, the high earners not rich yet, they don't have this luxury. And us as founders, myself and Anas Halabi and Abdurrahman Al-Malik, the three co-founders of Vennre, we belonged to this segment of the society, the high earners not rich yet. And we faced a challenge to get involved into investment opportunities that could help us create wealth on the long term, but that are top quality products. That's why we built Vennre, actually, a tech-driven platform designed for Henrys, empowering them with the tools and the opportunities that are usually reserved.
So when you talk about these opportunities, what are you talking about? Because we're not talking about sort of shares or bonds or those sort
Absolutely.
of things that you get on ordinary platforms. What are these really special opportunities then?
Absolutely. And you know, in the world of investments, people can invest in two type of asset categories, public or private. Public is anything, as you described, shares or bonds, publicly traded, London stock market, New York stock market. Those have been available for individuals, and you have as well ETF, and you have a lot of instruments that are trying to make this type of investments and have been trying to make this type of investment widely available for individuals. While private investments are investments that do not happen in the stock market. It needs two counterparties. Like when you buy a flat, this is a private transaction because it needs two counterparties to sit together. Private equity is ownership in private companies that are not publicly traded, like chain of restaurants, like Joe and the Juice is a private equity investment, which is very common here. And then venture capital, investing in startups like Uber before it became public. It was a venture capital investment. So Henry's, the high earners, not rich yet, can access public market, but they cannot access private market in a simplified way and accessible for them within the amount that they can usually invest with. So they cannot go into Uber when Uber was raising tens of millions or hundreds of millions and write checks of $1 to $5 million. But they can write smaller checks, but still are eager to participate in this market and those opportunities. Because usually in a private market, on the longer term, you can generate, you can create, you can grow your wealth. While in public market, it's a great diversification, it's liquid, but it doesn't offer you the return metrics that the private market opportunities do offer to you.
It's very risky though, isn't it? Because for every Uber, there are hundreds of businesses. For every Joe and the Juice, there are probably thousands of failed restaurant ones. So I assume this is why you're aiming at Henry's, people with a lot of money who could cope with losing some of it if they really had to.
Look, if I wanna go follow the regulator like the FCA are trying to protect individuals from investing in private investments because they are illiquid and they could lose their money, as you said, because they are opaque investment category, lack of accessing to information, lack really to know what's going on in the underlying asset, not like the public market. But in fact, this is where the role of Vennre comes in. We present opportunities that are curated and vetted. So we have our investment process. We pick the managers that we look into their investment opportunities, and we pick the opportunities that go through a thorough due diligence and thorough review process from the investment team, and we present those opportunities on the platform after they are curated and vetted. So we want to make sure that Henrys don't see any deal. So an example, venture capital, as you said, is high risk. And usually Henrys really tend to get very excited about venture capital because Henrys are trying to grow their wealth. They are not really after the like fixed income product. So they try to take a bet with their money on venture capital. There is this kind of behavior. But this is where you really need to protect Henrys. And you really want to make sure they look into venture capital opportunities that are relatively de-risked instead of being early stage, pre-seed, idea stage, or pre-A, more on the B stage and after B stage. Because then could be pre-IPO as well. They could capture the potential of those opportunities. And on a risk-adjusted returns, they participate in this asset class, but they don't really risk their money. Another point that is very important is diversification. How the platform help Henrys to make their next investment decision and to make sure they diversify. Because concentration in one asset class is very risky. Like if you are only in public market, and we saw the Trump announcement of the President Trump of the tariff liberation, the public market lost $3 trillion. That's so uncomfortable even for Henrys.
So what have your returns been? It's because it's interesting, as you say, if you've managed to weed out some of the duffers and you've had some really good ones, I assume. What have the returns been on these investments so far on average?
I think let's just double click on Henrys. Henrys are the high earners, not rich yet, and this is a growing segment. They make 100,000 of annual income and above. And what is very important is really how can we empower Henrys to have a proper relationship with money. And when you speak about a proper relationship with money, it's not only about investing. It's a spending, saving, and then investing. So investing actually comes at later stage. And when you try to define the relationship of people with money, investing is critical because how we make investment decision, how we decide on which opportunities we participate in or not, how we build spending and saving behavior to really have something for our future, because jobs are not sustainable, and markets go up and down, and you want to make sure you are ready for turbulence. This is where we come, and we highly recommend people to have emergency funding, to have savings that are untouchable, like I call them secret pockets that you don't have access to, pockets that you really need to, you don't have the card to spend from, you really need to make extra effort to go to the bank to access this money. And this is a money only you access it when you are in an emergency. You left your job, you have something happening in the family, instead of touching an asset you have. So going back to the return metrics, so if Henrys are well fenced in their relationship with money, how they save, how they spend, how they save, and how they invest, they are exposed to public market, but they want to balance and get exposure to private market. This is where an illiquid opportunity, holding period 3 to 5 years, with a return metrics of anywhere between double digits annualized IRR, they can afford it, and they could be looking forward to have it. And if one doesn't do well and it gets delayed in the exit, which is possible, and there is no guarantee of the return anywhere, and then they can afford it. But that's exactly what we are facilitating at Vennre.
Yeah, it's an interesting concept because, I mean, as you were talking about the various opportunities, I was thinking, well, you or I or any, a Henry could go to a crowdfunding platform, because there are a whole load of potential, big Ubers and whatever on crowdfunding platforms. But I'm guessing you're saying that with Vennre, you have the advantage of you guys sifting out the rubbish. So you have the ones that have really got a potential to grow and not bomb.
Absolutely, Jasmine. I think the world of investment has been maturing in terms of what we offer for retail customers. There has been a trend about crowdfunding for a good period of time, allowing people to participate and speaks about democratizing access. And as you said, that proved to be sometimes exciting, but as well it has a lot of risk. With that, they lowered the entry ticket to as low as possible because they want people to afford the lose if they lose the money. Now, then you had investment platforms. That's another trend where you have the Moonfair of the world, the Yield Street in the US, and other platforms that are trying here as well to really offer the private market opportunities, but for upper tier, high net worth individuals, ultra high net worth individuals, or sophisticated. The next wave of fintech is more about wealth management, is approaching the topic of investment from wealth management perspective and from diversification perspective and from making sure you only get in suitable opportunities that are suitable for you as an individual. Your circumstances are different than my circumstances and other individuals. In the crowdfunding and investment platform, they treat people as this is a product, plug into it. But with wealth management, it's all about understanding and defining where you stand in your wealth journey. This is what Vennre is focusing on the 2.0 of Vennre. Where you stand in your wealth journey and how we take it forward.
So if I'm Henry and I'm thinking, oh, I've got cash I want to put into some interesting private equity products, how do I do it with Vennre? I assume there's an annual fee, is there, and is there a minimum amount that I have to put in, 100 grand, 50 grand, something like that?
So first of all, we are a mobile app. You can download our app on Apple Store and Google Store. You go through an onboarding process. We want to make sure, because we abide by the FCA rules, that you are eligible to get access to the app and what's behind it. You have the opportunity to get an onboarding call where we speak about your objectives, what you are aiming to achieve, and then discuss the suitable opportunities for you. Eventually, you can look into the opportunities after you had this onboarding call, and it built for you a perspective. Then you would be guided to or coached. We have wealth coaching that allows you to make your next investment decision. It's very important as well. We empower you that you make your next investment decision, not us, because we want to scale the business as well. We cannot make decisions for individuals. We want them to be empowered to make their next investment decision. And then forward looking, you can execute it through the platform, subscribe to an opportunity, you look into its details. You have a portfolio section where if you've invested in different opportunities, you could see the returns aggregated together. This helps you as well. You do the KYC, AML, all the required process, signing application forms, and so on.
And how much does that cost? Because that's quite a lot of hand-holding that you've got there. So there must be quite a decent annual fee or something like that.
Well, actually, we're very competitive. We charge upfront fees for your subscription in any of the opportunities. It gets up to 2.5%. And then we have an annual charge just to cover administrative fees, because we deal with a third-party custodian that hold the assets. So we don't hold assets, and the assets are held with a third-party custodian, which we have to cover their fees.
And finally, Ziad, when it comes to private equity or the opportunities that you offer, what is it that is so attractive about them? Is it just the potential to make serious money? Is that essentially it?
Not only this, we offer real estate, private equity funds, and private equity secondaries, venture capital co-investments. Now we're launching an opportunity to invest in venture capital opportunity, Series B. It's one of the fastest growing food tech in the world, and it's based out of the region in Saudi Arabia. They deliver 12 million meals a year, and this business is growing to expand globally, and they acquire an operating business in the UK. So imagine like Henry sitting in the UK now can participate in a business that they see their advertisements in the tube. So I think as low as affordable amounts. So I think this is really the opportunity, participating in curated and vetted opportunities. The other point that we focus on Sharia compliant as well. So we abide by the Sharia rules to offer opportunities that are Sharia compliant. And by the way, Sharia compliant is something, a different definition of being ethical investments. And the new generation, Gen Z, they are all about ethical investments with purpose and not only just investment to generate money. So I think this is a key differentiator that people like us would really participate in something that they would be proud of saying, not only any kind of money.
That's really interesting. Ziad, thank you so much. So this has been Ziad Mabsout, for the CEO and co-founder of Vennre. And do remember, as always, nothing in this podcast should be taken as financial advice. It's financial information only. I have to keep saying that. I'm told to say that, so I'm saying it, and you know it's true. And you also know it's true that we need you to comment. We need you to like, subscribe, tell all your friends, forward. You know it's a good one. And it's been lovely to have you today here on the MoneyMagpie Invest podcast. Join us next week for yet another interesting MoneyMagpie Invest podcast. I've been Jasmine Birtles. You've been great.